The markets go up, the markets go down, the markets go up, the markets go down. Boy, oh boy, what a difficult market. Wrong. It's a great market. This is what we live for. We want volatility. We want markets to move up and down, down and up. If you're finding this market difficult, then you might want to reassess what you've been doing or what you've been conditioned. This is Bag of Dawn at stockmarketcaddy.com. It's February 13th at about 7:30 a.m. I apologize for the froggy voice. I have a small cold, but I wanted to stay with everyone and show you what our systems are showing us, particularly on the ES. If you've been watching our videos over the last week or two, the last month, it's been a really good example of how we monitor our positions and how we trade. The monthly time frame on the ES is long. We continue to be long. The ES weekly is long. We continue to be long. The daily had gone from long to flat. We shorted on the hourly time frames 2 or 3 times and then ultimately got into a short position on the daily. We thought that we were underway. Lo and behold, she counters back, does a counter trend move, moves the daily from a short to a flat, and it cost us about $1,200 on that attempt to get short the market. However, when we were long, we were shorting the 1 hour and the 240, and we picked off 2 or 3 trades, and they paid handsomely. We don't expect 1 hour and 240 trades to pay off like a weekly or a monthly. Let's face it, they're shorter time frames, but they happen more frequently, and they afford us to earn the capital necessary to ultimately get into these longer trades. When when we were short here and we got the long signals on the 1 hour and the 240, we actually went long because we were hedging this short. So that's how quickly we will do this. And the way in which we do it is we have 2 accounts. We have a short account and a long account, or what we're looking to do is establish a trend on one and trade the counter trends on the other. Think of it in those terms. But now overnight, we did, if you watched our video from a couple of days ago, the long on the 1 hour, we made good money that more than covered this loss on the short on the daily. And then overnight, lo and behold, the 60-minute, while we're sleeping, goes short. And we're going to show you that. So we'll be short. Then the 240 is long. We've left that long. We gave it some thought about taking that bread the other day. We opted to remain long, and that most likely will come off. And now let me show you what it looks like on our trade manager. By the way, before we leave this, let's go to the trade manager. Here's our trade manager. Here's our monthly position. You can see the time and date that we went in. Here's the weekly position. Here's the 240 long, and here is the 60-minute short overnight. And we're down a little bit. And here is the flat position on the daily. This is the one that we took a punch in the nose on, but these other shorter time frames are more than paying for our opportunity to try to get into this trade and into the new direction. Now, I've been asked if the daily does in fact get short and really begin to motor, we will see indications, cautions on our radar on the weekly. It'll be at that time that we'll move to protect these monies. And you can do that continue through hedging, or by selling. If you're in the SPYs, you can be selling covered calls, deep in the money calls, buying puts and things of that sort. So for us, when we truly say that we follow the market, we do. We follow the market. We know the time frame. Let me just go back to the radar. We know the time frame that we're trading, we know the product that we're trading, and we know the system that we're trading, and we trade them in parallel. The Russell is still short on the daily. The NQ as long has been the strongest, the NASDAQ of them all, but still showing a 1 hour short. but all along here. And then the Dow had been the weakness, did come countering back, got into a flat position on the daily, but then overnight kind of began to roll down. And we continue to see on the monthly time frames for the Dow hints of a stall or a weakness. So we still think that we're going to resolve to the downside, but we're going to go where the market goes. That's what we do. Um, we also want to remind folks, if this is more than what you want to do, if you like this style of trading, feel free to give us a call, feel free to email us. And it does take a little bit of time, but it's very easy, and it's something that we do day in and day out. It's how we turn out the noise. We do see very significant point and figure patterns on all four of the major markets. If you want to know more about point and figure, the lost art of point and figure, if you come to our website, stockmarketcaddy.com, go to the Pro Shop. We have a beautiful DVD set that is in excess of 90 minutes that'll teach you the lost art of point and figure. Good luck to everyone. And again, if you're finding these markets hard or difficult, stop first, reassess, and find a mentor. Good luck.